Hello everyone, this is Sunny again, and you are watching my YouTube channel Trade with Sunny. Today, I'm gonna talk again about pound dollar, and wanna show you something I analyzed on last Saturday, and you can see my last video here, on which we saw a 6 months fair value gap, which was this one, from low of this candle to the high of this candle, and here was the mean threshold of the fair value gap, from where we were anticipating the market to get rejected was downside, and I marked this daily fair value gap over here to get rejected it from. Let me show you the marked zones. Yeah, here we go. So this black line is the equilibrium of 6 months fair value gap, and it started going lower and left this fair value gap behind to tap it and then get rejected again. So I was anticipating the markets to go lower on Wednesday, or make the high on Wednesday and start falling on Wednesday or on Thursday, and then keep going down, which it just has gone a little bit up on Thursday. I think there was a red folder news, a high impact news on. If you don't know about that, you can visit my Forex Factory, or there are a lot of many other calendars who show you when there is going to be a high impact or medium impact news which can affect the markets. So one thing I want to highlight it here, that maybe most of you would be thinking that if it was here on daily chart, and we would have watched the price action and in this zone, and it has left this zone above and even closed the candles above this fair value gap. So this is not an out of the blue, sorry, what do you call it, this is not a once in a blue moon situation. So this is a really a common situation, that if we see that this fair value gap is aligned with this order block, okay, an order block is the last up close candle. If we are looking for a bearish order block, it's the last up close candle before the down move, okay. So this is an order block, this is an order block, okay. So if we see this doji as an order block, that could also be a perfect definition of order block, and if we see this one as an order block, that's also a very well defined order block, for which we see that it has just tapped over here. It has just tapped the wick of that order block, which is the responsible candle to sending the markets down here and tapping back here and then going down. Another thing which I left behind for you guys and didn't mark it for on that day on my analysis was this gap. Yeah, so this is the inversion fair value gap, okay, and an inversion fair value gap or any other PD array, when it gets inverted, it's even more it's more strongly, or it's sending the markets with more power, and creating displacements like this, which we can see that just these two candles covered a lot of the volume from all of this up move, okay. And now let's get on lower time frame and see how the price action was there when we needed to get into the trade. All right, so here was our zone to monitor this red candle area, as I did not as I did not mark this gap, the inversion fair value gap, which is good for you. I just marked it for you guys to study it, that how it reacted and how the market price reacted on these zones. So I will take it off for now, and will just uh, show you how it reacted on the areas which we already had marked. So if you see that the markets were here at 3 a.m. All right, that's that's the first silver bullet of the day in London as London session. So it can be ignored, because personally I just trade New York sessions. Very rarely I do trade London as well, but London is really London has got clean price action, cleaner than New York at least, with less manipulation and stuff. So if we see, the market started falling down from this area, coming down, and this was the swing low, which was made at 8 o'clock. This is a 15-minute chart, and this made low here, rejecting from this fair value gap, acting again to reject it, but it's not a valid fair value gap, because we have been looking for a bearish trend, because on a higher time frame it has already got rejected from the mean threshold of 6 months fair value gap. Okay, it's raining outside, fair enough. So now we are looking for our trade. So let's see at what time it gives us a proper trade, so according to the price action. So I take the trades in AM session most of the time, which is 8:30 to noon. That's 12 o'clock New York local time. So if we see again that did it give us a trade at 10 a.m. now, did it give us a trade at 10:30, 45, 11, and now not here. Let's get on to 5-minute chart. Let's see how this is unfolding over here. So what time is it? Let me highlight with the vertical line the time of the day. Where is the vertical line? Yeah, we are gonna mark it at 8:30. Yeah, here we go. Here the day starts for us at 8:30 New York local time. So if we see, it started falling down from here, then at 5 minutes it has given us the opportunity to get in here, but that's not our time to get into the market. But this definitely is the entry which we could have entered, which was at 9:30. Okay, if we zoom into it, if you see, look, it took the swing low over here by this candle on 5-minute chart, and made a fair value gap in between, and it just clicked into it at 9:40, which is the perfect time to get an entry. Okay, and it has got rejected from there, and started falling down, and keeps going down and down and down. And again, this is a gap which just caught my eye. Okay, this got rejected, and I hope this should be the time of the day which we want. Perfect. That's 9:50, 9:55, and 10 o'clock. Perfect. Oh my god, that's a perfect entry for Friday. And yeah, here you go. That was our Friday entry, and maybe it has not yet taken its profit, but in the upcoming week I believe it's still gonna go down until something happens, which is something like geopolitical or stuff like that. So for now, that's what I wanted to show you about my analysis, which I posted here a week ago, last Saturday, and today was the Friday, and that is completed whatever I told you. So I did analyzed on higher charts, higher time frame charts to make a bias for long term, but that doesn't mean we need to hold our trade for months or weeks. We can still take the short term trades and make profits. The higher time frame bias is just to know the direction of the markets. You can still trade the small trades, just like I've just shown you two trades over here coming at the at a specific time of the day, and that's it for now. I will leave it all with you to study, and I'm getting late somewhere, so I'm not gonna talk more about anything maybe today. Okay, I will try to create a new video for tomorrow or maybe on Sunday. So until next time, take care.